Welcome to the NAMB Podcast, where we bring you the voices that drive the mortgage industry. Join dynamic hosts Ginger Bell and Matt Shields as they dive into bold conversations with top experts, industry leaders, and change makers from across the country. From insider insights to game-changing trends, this is your front row seat to what's happening right now in the world of home finance.
Well, hi there. Welcome to another episode of the NAMB Podcast. My name is Ginger Bell, and I have my co-host with me today, Matt Shields. Matt, I know you're excited to jump into our guest today.
Oh, I'm so excited. It's great to be here, and I'm so excited for our guest today. This is a service that I use every day in my origination activities, so I cannot wait for our listeners to hear what Tiffany has to say.
Absolutely. So, July, we're focusing on technology. The whole month, we're talking about technology. And one of the most important things in terms of technology is what you're doing in order to get your rates. So we thought there's no one better to be able to have this conversation with than our industry partner, Optimal Blue. And we have the Vice President of Product Development, Tiffany McGarry. So Tiffany, thank you so much for joining us today.
Thanks for having me. I'm excited to be here.
Yeah, absolutely. So, I think just jumping off really into technology, for those who maybe don't know what Optimal Blue offers as far as a product, maybe that's just a good place for us to really start and talk a little bit about what you offer to the industry.
Yes, absolutely. I'm glad that we're starting here. I know most brokers know LoanSifter extremely well. That name is in the broker space for decades. They don't necessarily always connect it with the Optimal Blue name. That's kind of been a bit of a struggle.
Disconnect
Since
there.
LoanSifter has such strong brand recognition, we've always kept the name. And you can think of it as LoanSifter is the solution that brokers know and use. Optimal Blue is the technology and the network that powers it. So with that, brokers, utilize the LoanSifter, have for decades, and they benefit from the broader Optimal Blue ecosystem behind it, our technology, our data, our connectivity, our relationships, and just industry expertise that can help continue to move forward LoanSifter and give more capabilities to brokers. So giving that broker platform where they are able to access their own investor relationships quickly and efficiently and evaluate which products and rates are available for a borrower that they're working with in a repeated, consistent, trustworthy process is what LoanSifter's bread and butter is and what we continue to expand upon.
Yeah, and that's so important. And I know, Matt, for you, obviously leading a team, being an originator yourself, having that technology where you can really know what you're getting is the best and the most accurate, and especially in a rate-driven industry
Mm-hmm.
that we're in, that's so important. So, in obviously you and your team are a user of LoanSifter, so you know it very well. And thinking about that, what are some of the questions that you have for Tiffany on how originators can best use the service?
Yeah, absolutely. So for me, me and the team, we use it every day. I've been in Optimal Blue all morning, so happy about that. That means I had some loans that I was locking and doing all that. What would your tips be because I have some newer loan officers on the team. What would be your tips to them as they're navigating? Should they be really looking for the investors that pop up in guidelines, or what are some good practices for that newer loan officer as they're pricing their loans in your service?
Yeah, I think newer loan officers, newer brokers, when they're utilizing technology in general, they don't always approach it as I'm using this to solve a problem. And the idea is that they don't even know that there's a problem to solve.
Yeah.
And LoanSifter is there to solve a problem where without it, there would not be an efficient way for them to quickly navigate the options that they have available to them. So a lot of times, which many of us do in any scenario, is we'll revert back to what's familiar to us, what we know easily and quickly, which is going back to the same investors, the same products to offer to borrowers. So capitalizing on the technology that they have available to them gives them a consistent way to evaluate the broad options of products available. In the broker marketplace, it's great to have various relationships, but that can quickly become overwhelming to them. And having a way and a process to make sure they're taking advantage of everything that those relationships have to offer is where having technology they can leverage to make it efficient and clear and solve a problem that ideally they don't even know that they would have, which is hundreds of products. Which one is the best one for my borrower? What are the lowest rates, the prices? What are all of the options that I can offer? At least giving them the first swag at, here are the top ones that I want to discuss with that borrower and my customer, and utilizing LoanSifter to have those conversations and leveraging it to the full extent. So making sure that they're not falling back on what's familiar to them, and using that consistent process of searching, seeing what else is out there, really.
It's one little thing about it that's been a huge help for us recently is we're seeing a string of buyers who are trying to qualify with both houses at once to avoid, contingent offers. And in the last maybe 45 days, there's been 3 or 4 scenarios for myself where someone owns a home free and clear in another state. Their goal is to provide, they want to recast later, or they want to pay that mortgage off in full. So having that servicing indicator of, a 30% recast window, an early payoff window, it's really nice having that information up front at my fingertips. So after I get off the phone with somebody, I can then price it up. And then now I know up front who's the exact investor who's okay with a 30% drop off on a recast. So we're not having, as a manager, I'm not having buybacks later. I'm not having issues later with the team. So that's been one way that I wasn't really using it before that has been a game changer for me. Instead of me messaging capital markets and asking, hey, who's the servicer I can use here? The updates in OB has made it so easy for me to just get that information at my fingertips. So that's been a huge one for me that I love.
That's great to hear. Yeah, we just wrapped a large project to implement additional search capabilities and variables to hone in a little bit more on various borrower complexities and scenarios to help you navigate exactly what you can confidently quote to a borrower and commit to that borrower and what their options are.
The early payoff has been a big one. And then the other one is temporary buydowns. So it's great. I can just drop that drop down box, 2-1 temporary buydown or whatever that temporary buydown is. And now I'm getting the exact investors who are offering the exact product. And I'm not having to lock a rate and call the consumer later saying, hey, it's actually not your rate. This is your rate. So I feel like you guys just give us so much information at our fingertips that I can do things in real time and not have that lag period of reaching out to corporate for help. So thank you guys for all the tweaks you're doing, all the adjustments. It's fantastic.
That's great. Yeah, that we based it off of feedback from our users of what gaps they were feeling were there, because the industry and the product offerings change so quickly, and we have to stay on top of it as well. Those were a huge request, along with, I'd say that the other one was short-term rental origination was a big one as well that we rolled out.
Well, and having that strategy, first of all, knowing what the technology is capable of, right? And so, and then putting that into a strategy. And Matt, you're always really good about doing that. The third part of it is sharing that strategy. And so that's part of it too, is, sharing that information and letting others know, hey, did you know? By the way, did you know? And so those are things really, staying tied into what, companies are like Optimal Blue are offering in terms of, updates, changes, just a strategy like that. In fact, I honestly think I'm going to put something, we're working on our newsletter for NAMB, and that would be a good little strategy to put in there because you may not realize it. And just the whole, not only are you able to go to the borrower with that, Matt, but down the road, you're saving yourself and your company the risk of having that, potential buyback when that is done as far as, the recast. So I love that part. Tiffany, earlier you talked about some of the misconceptions as far as LoanSifter and Optimal Blue and, getting into all the different pricing. What are some other misconceptions in terms of originators and technology that you see, consistently?
Mm-hmm. I love learning what misconceptions are out there because it's our job as technology to identify problems, and there's usually a problem if there's a misconception. One of those that we see pretty often is that more investor relationships automatically means more optionality. And that can be true, but where the pitfalls that you can fall into is, I think I was saying earlier, you can quickly become overwhelmed by the options that more relationships bring to you. So you'll just fall back to what you're familiar with and what you know. Having technology to organize that for you is important. Another piece of that is having more relationships could require you as a broker to log into various portals to even find out what's out there. And you need a centralized place to be efficient. And a pricing engine does that for you. LoanSifter does that for you so that you have one place to evaluate across the board what all of your options are. So I think that's a big misconception, is that it automatically means you have more products to offer. And that's not the case unless you have a way to evaluate those
Yeah. And that's back to
quickly.
the strategy again. So
Mm-hmm.
we had Dave Savage on last, and one of the things he talked about as well is when you are presenting an offer to a borrower is to make sure that you're giving them choices, because if you're not giving them those choices, they want to have those choices. So they will find someone else to be able to be part of that
Mm-hmm.
choice. And so, having it to where not overwhelming them, same kind of thing with the borrowers, right? It's
Right.
like, originators, we can get overwhelmed, borrowers can get overwhelmed. And so your job is to be able to say, okay, let's look at the best options. And maybe if you're not falling back to what you're used to, is say each one, you're going to pull a new product in. And Matt, you do a really good job, especially with the non-QM on that.
It's such an untapped space, and I love being able to have that NOB because,
Mm-hmm.
Tiff, like you said, trying to log into all these different portals to then price something up, and then to make sure you're even pricing it up accurately yourself as an originator. That's a lot of work. It takes a lot of time. Even
Yeah.
like the fact that in Optimal Blue, you can price up mortgage insurance. That
Mm-hmm.
saves so much time to not have to get in and out of the file, run a bunch of different quotes. It just, using you guys streamlines my process so much every day. It's like, I couldn't be happier that you're on today. It's nice to put a face to the company.
Oh, that's awesome. It's great to hear. Yeah. And Dave's right. You do need to give options to the borrower. Otherwise, they'll go somewhere else to have those conversations. And it's also important. And I want to be careful when I say the lowest rate isn't always the best one for the borrower. You need to have those options of different rates and being able to explain what they mean, and for you to, as an originator, quickly see like this one and be able to explain this one will require you to buy down the rate, but here's what it could mean for you as the big picture. Or this rate might be a little higher, but this is why you might want to consider it. It's less money to close, less fees, and educating them. And other technology providers like Dave is great at doing that and being able to be the engine that has those relationships, the mortgage insurance relationships, the other vendor relationships, is powerful for us to be in the middle of that. And this industry is heavily relationship based, and that kind of goes into another misconception that we have as coming from the technology space is technology will remove the human element of what we do, whether it's mortgage or anything else. I think that's been a topic that many have talked about, especially in the last year or two with the introduction of AI.
Right.
As technology evolves and does implement those machine learning capabilities, the AI capabilities, whether it's something that the originator uses or we use internally, that could somehow damage the relationship piece of what we do. And I think that's one of the biggest misconceptions that we run into. And our stance is good technology should be doing the opposite. Good technology automates those non-human tasks that an originator does to allow them to spend time on the human part, answering the borrower phone calls, building relationships with realtors, talking to referral partners, doing the relationship building so that they're not at a computer doing the non-human stuff. Good technology should encourage
Right.
human elements.
Yeah, that's so important. And being able to know where to use that technology and how to leverage it to be better at having that human approach is critical. So talking about technology, what are some of the things, and we're always looking towards the future, what are some of the things that Optimal Blue is working on, and without disclosing too much, but we can maybe expect in the future?
Yeah, I could tease a couple of things. So we meet a couple of times a year to talk about our roadmap. So beginning of the year, we go 12 months out. Mid-year, we're talking about 2027 already, and we had a great time yesterday, my team and myself, talking about the future. And what that means for Optimal Blue and what that means for users of LoanSifter. I think LoanSifter users can look forward to some capabilities around rate alerts, being able to set desired, maybe they know a borrower shopping, there's a refinance or whatever it might be, being able to set alerts of looking for something around this price, this rate. I don't need to just periodically run searches. You tell me as the technology provider when there's an option that meets my specifications, and we'll send an alert to you and you can hop on and quote that to your borrower. So we're working on that for LoanSifter, as well as some mobile capabilities in the near future where you can take LoanSifter with you. Anywhere that your cell phone is, LoanSifter, your own version of LoanSifter with your specific relationships and your pricing, and the engine behind it can go with you without having a PC, a laptop, anything in your bag. Wherever you are talking to a borrower, you can pull out your phone and here very soon be able to give them some quotes. So we're focused on efficiency always. Things that we're always, the boring stuff is always still the things that we focus most on, where the engine, the accuracy, making sure we're making investor updates quickly we're already always strengthening that, and already looking forward to additional product expansion. One trend that we're following closely with the implementation of the additional search fields that we just rolled out are which ones are next. What is the future of product expansion? Where are the regulations going? This weekend, we will roll out the capability to price based on various credit model support, credit score modeling. So supporting the classic FICO, Vantage Score, FICO 10T. We'll have that capability after this weekend throughout our platform. And looking into what's next for products. We've seen a big uptick in home equity and second liens as we come out of the ripple effect of the last 6 years, and those who don't want to touch their first lien that's been a big uptick as well, and just making sure that we're prepared for any direction that those products might go.
Fantastic. And I know, Matt, you're super excited about that mobile because you're constantly on the road and being able to have that. So that's going to be very, very important. And you'll have to let us know so we can include that and let
Yes,
our audience at NAMB know as well, because
for
those
sure.
are important to
It's
be
a
able
game
to
changer.
know.
It's such a game changer to have that. I can't wait. That means I could maybe play a little bit more golf while I'm golfing. I can try sunset.
Exactly the
We'll see.
reason. Yeah,
We'll see.
that's what we had in mind.
Hang by the pool. I mean, yeah, an
Why
island
not?
somewhere. I mean, all
Yeah.
that. So
Yeah, why not?
very good. Well, Tiffany, thank you so much. We were so much great information, and really that's it. Is the ability in our goal in being able to do the NAMB podcast is to introduce our audience to technologies, to ideas, to other people who are doing well, to be able to help them in their business. And so we really thank you for that and appreciate everything you've done. And of course, if you are looking for technology, we do have a technology page. It has information, all of our industry partners, our technology industry partners, and we'll make sure and include that, but you can always find that information at namb.org. And make sure and follow us, like us, subscribe. We have a brand new episode every single week, right, Matt?
That's right. That's right. Thank you so much for being here, Tiffany. This has been awesome today.
No, thank you so much for having me.
Awesome. Very good. Okay. So we'll see you on the next episode of the NAMB podcast.
Thanks for tuning in to the NAMB Podcast, brought to you by the National Association of Mortgage Brokers. For more episodes, resources, and guest interviews, visit nambpodcast.com. Don't forget to follow, share, and subscribe, and we look forward to seeing